Okay, Monday morning, January 23rd, 2017. Guten Morgen. All right. First, I want to start off with a quick commitment of traders in regards to Eurodollars. I talked last week and some time that I thought that we'd get a bounce in debt, and it would be beneficial in an ideal world, ideal world. What we'd do is we'd have equities come off, the dollar come down, and interest rates also come down until through second quarter to sell homes in America here. Euro dollars are basically T-bills in Europe, and there's a thing called the TED spread that kind of gauges how nervous the bankers are between Europe and the United States. When I run through the futures this morning, I paused a few times with Eurodollars. Eurodollars, I'm looking for the paper to get to 5%, so around 95. Basically at 100 interest rates, euros would be at 0. Okay, so what I'm looking at here is that the money's basically, there's no money going into euros right now, but the commitment of traders is kind of lopsided again here. Basically, the trigger would probably be short covering and then also just hiding out to see where the shells land here in the first 100 days plus. I just realized something here. Our POTUS is steadfast and thin-skinned, but what was it, the day after the election, the Japanese prime minister, whatever, came running over here. And now I believe we have Britain coming over. I would like to see the president actually go through with 100 days before he gets to be influenced by outside forces. It's kind of like Obama. He had his way, and then before you know it, he was checking and jiving, with the rest of them. So, but the markets will take care of themselves, and it'll all work out. We survived under everybody else. But the point was just that Euro dollars is kind of lopsided on the short side with people, and I don't see any money flow going into it. So Euro dollars would be one. If I had a infinite amount of money and still standing in the pit, I'd just be buying these things all day long just to mess with everybody. But what you're looking for on the Euro dollars, I guess similar to, here was the beginning of last year, so the same type of deal. The gaps are basically, the marketplace is already priced in interest rate hikes. So here you have a deal where, kind of like the bank trade. Everybody believed the bank trade, and then you take out, $6-8 out of JP Morgan. Okay. So Euro dollars, they're lopsided. Short covering rally would probably start it off, and then they go chasing after it for, if equities do roll over here. The indexes, we know that underlying a lot of issues have already rolled over. Mine, I still lean that on, obviously, if I'm looking for 95 on Euro dollars, 95, 94, I'm looking for shorts. But for right now, I gotta believe that we're gonna gun these things, at least through the first quarter here, and then the dollars come off, and gold's kind of pausing again at 12.20, and I kind of recommended take a little off the table here, write some calls against your long positions. From stopping a C wave to 1,500 on gold is you have to get through the first hurdle of the 1020 area. So, but I just want to look at Euro dollars real quick here, and then I'll run through the futures. Okay, so I guess we're just starting straight at gold here. Okay, gold, like I said, 1220 area is basically an area that's had problems. I call this the happy place. This is the bell curve. Okay, so this is where the most amount of trade has happened at the price, and it's happy. Both the bulls and the bears are the most happiest here, about 1260, we'll say, on gold. Okay, but the first stopping point is the 1220 area, which was previously support and now is acting as resistance. But silver's already up at its happy place. So, you know, two sides of the coin. Gold is has some more room to run, or silver will outperform gold on this bounce here. But just for right now, there's a pause. These are 2-day charts with candlesticks. You need a second day to confirm. The yellow line here for new subscribers, and that it is money flow. I'm looking for divergences. You know, like here, the money flow is above the price, kind of pulls it together. Here, price goes through money flow, and it basically set in a top on here. Okay, so the money, I still look at gold overall as in a bear market, but I'm using 1985 to 1987 type of behavior, you know, with the Canadian dollar going higher, the pound going higher, and gold in that bouncing too. 1987 was just the peak of the real estate cycle too, so you had some underlying use of the commodities, but we still had, at that time, the dollar was coming off of 164. All right, so gold, basically, we did talk last week that the deeper area in here, it can get down like around 91 down in that area, and then I think 85 or something in the cash side. But for right now, it's basically held. I'll say set 1205 for an alarm here, and then we're working on, I think it was 1217 or so on the upper end. But right now, this is you know, the second attempt type deal of trying to get through this. So I'm one of those that, you know, maybe sell some February options against any like GDX, you know, like, if I haven't looked at the options, but, you know, like 24 or 25 for February, or 26 type of thing for March, you know, where you're still collecting some premium, you still have some time. And also remember, you know, you sell at 26 and gold does decide to break through, you can always buy your GDX under 24 thereabouts, and you already have the 25 call on. So writing against it, that's how I kind of lean at things. I prefer, you know, we first see the first red bar at the 20, and Kevin says, you know, take some off the table. He takes them off the table, and here we're back again. So it's one of those where instead of selling or whatever, depending upon, but I'm kind of a guy that likes to sell covered call options. And if I have to buy the falling knife, writing naked puts, somebody pays me to buy something. Okay, so I look at it as kind of bonus and beneficial. You know, you don't have to sell out of your position. You can always write some out of the money calls, you know, that kind of thing. But for right now, gold's kind of pausing up here back at the 1217 level, and 1220 is, you know, the first level here of resistance. But here we are with the Eurodollars. How timely. Okay, so the Eurodollars, this and the Fed Fund futures and T-bills, that's the front end. When we're raising rates, it's the front end. We're trying to jam the economy. We get an inverted yield curve where overnight rates are higher than 30-year rates, and that usually precurses a recession, and we should have one. The signs should be coming through in the second half of 2018, going off of the 36-year typical stalling of the economy, or 36 months, 3 years after the first rate hike is usually when it begins to filter through. So we're basically moving towards a recession here. So look at it that way. If we should have it, we should have the recession. Odds are pretty strong by 2020. That's usually how it goes. And like I said, I'm looking for the POTUS to be one and done, typical of what happened with George Bush. But Eurodollars, you can see the money flow came out of it. Okay, and so I think the bells and whistles went off overnight on the price. I think it was it 88.5 or something in there. I suppose I could look. It was something down here, right here, probably pivot. Yeah, 89.5, I think what it was. For coming back through, so the euros have already turned Like I said, if I was still standing in the pit, you know, with an infinite amount of cash, I'd just be buying these things just to mess with the herd, because we looked at the commitment of traders report and it's lopsided. Copper, blah, 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 sideways. You know, for me, you know, yeah, okay, if it decides to break out here, then we're looking at, you know, start walking it up per dime, 280, 290, whatever, all the way up to 320. I'd rather look at it from the other side of, say, like 160 to 180, that kind of thing for right now. Take a look at a weekly. You know, same type of deal with gold where it's stalled on here. I just think in a larger position from yesterday's video when I ran through the monthly charts, I prefer to play commodities in that on the short side, except for your bounces, say like with metals. Meats, the money flow and everything like this talked about. If you're a producer, short it. You know, I don't think I have any meat traders here. I did talk about yesterday something like, I think long feeders, short cattle. I haven't looked at the spread, but that may be one angle to go after. They are marketing. I watch the prices of retail food, and then I look at the shopping carts of the humans. I do. It's kind of like when the people are on TV and they talk their book, but it's going the opposite way, and you have to see if these guys are actually going to lose all the money that they have under management. It's sad to say, but boy, when you get older, you can definitely read the traders, because you basically stepped on every landmine too. I shouldn't say stepping on them, but you know what I'm saying. All right, so what do we have? The cows. If you're a cow, you know, producer, you know, do some hedging on here. They are marketing more in the stores and stuff, but you know, you still have to cough up to $3 a pound or whatever, you know, that kind of thing. And then to me, I guess on a weekly, it'd be a larger degree sideways. I think, yeah, the best probably for the bulls is, you know, just drier trend line. It's still doing it, whatever, blah, blah, blah. And also remember that prices begin to swing wider at different contract months. It's not really a clean, smooth roll. It does have seasonalities, so for spreading and stuff like that. I'm a big meat eater. If it's 6 foot tall, if you catch my drift. All right, moving on here. All right, natty gas. All right, natty gas. The first key is up in here. No matter what the hay happens, the 350 or whatever, you have to go back and be long again. We're looking to buy the deferred contracts I talked about, you know, moving the risk down to 70, and then you get underneath here, which would be if I'm standing in the pit again, I'd want to go and kind of scoop up under this here. And then you're beginning to talk about 20, and then I pointed out the October contract go down to S2, which would be about $2, and that would not negate the bull trend. Okay, so at best for the bulls, we have a larger sideways pattern. The scary part was this money flow up here, a lot of bodies. So naturally, you'd want to bleed them, and you have a, you know, breakaway type gap type deal, blah, 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 yada, yada, yada. The commitment of traders report, you know, and then you have your money flow. So at best for the bulls, you know, remember we were shooting for the gap area as well. Here's the gap area on the way up, and now it's overhead resistance again. So 350, no matter what, you have to be in this thing. If it does, you do clear the 350, then I'd be looking for like 408 kind of thing. And if that does happen, then you will be, if you know, so you're a subscriber and all that fun stuff, I'll keep you up to date. But for right now, I talked about, you know, last week kind of being a little defensive on natty gas, seasonal and things of that nature. Like I said, all I know is this is a 17-year low. I don't want to be the guy that had, you know, leaves it at a 16-year low, that kind of thing. So you don't have to hold tight. This is all money management here. Remember, we're talking just because you can put in $3,400 doesn't mean you can't put in 10 grand kind of thing. You know that the low is 60 cents lower than this. So that's, you know, $6,000. And then we have here from, you know, we'll just call this a buck, right? Down to here, call that a buck. That's 10 grand. So that's 3-time margin if you decide to, you know, so like I said, you know, kind of put up at 100% and go that way. You know, just start it off that way. I would begin, if I can get some movement down back into this area under $3, then I'd be willing to start looking at writing naked puts to get some fresh longs in here. Somebody pay me. You know, like I said, this is, to me, natty gas is in a larger sideways pattern from 2008. So this coil is tightening. I don't know how long it's going to take. I don't know, blah, 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 yada, yada, yada. But it can only go to 0. All right. Defensive. Okay. Nikkei. All right. So an index is an index is an index. This one looks like the Dow, right? Okay. So the Dow kind of did its thing. I talked about it possibly being a C wave and spike higher for inauguration, and that doesn't seem to happen. But here on the Nikkei, which has the same type of looking pattern as the Dow, it fell through it. Gave it basically a retest. Remember, these are 2-day bars, and now we're coming halfway back again. So if we get some follow through here, it'll begin to negate the situation too. What's it, 16.8 from 18? So it's another 10% drop on here. On the Nikkei is a fun one too. $5 a point, just like YM futures. You know, I'm on the West Coast, so dinner time or right before bed. I like the Nikkei because it's an easy read technical wise, and you know, it just seems to flow a lot better. You know, for right now, I'd be on the defensive side on the Nikkei here. NASDAQ. All right, so the NASDAQ, which was the leader in the beginning part of 2016 and then faltered, and then the Russell took over, and that one is probably the ugliest looking of the charts. All right, so we have a 7-8 year bull market, right? Yeah, 7-8 year bull market, but we also have some stocks that have peaked in 2013, 14, 15, 16, blah, blah. You know, like Apple, you know, we have an opportunity here of whacking Apple. I did a video last night on Monday's earnings. Most of them are whack financials. And there's a couple maybe call buying. How I go after earnings is to go against the trend. If it's been pointing straight up for the last quarter or year, whatever, the puts are going to be cheap, right? Just in theory, you know, instead of buying a call for $100, you buy 20 puts at a nickel. You know, that's just kind of how I look at it. You know, like I said, options to me, you run up to the high stakes machine, you put the $100 bill in, you pull the handle, and okay, cherries. Well, cherries is good. That means the broker's going to get paid on the other side. All right, so what do we have here? NASDAQ 8,000 on this one, or 48,000, 4,800. Happy Monday to everybody. Guten Morgen. Es ist gut, ja. All right, so the NASDAQ deal, yes, blah, 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 broke out, pointed higher, yada, yada, yada. So just set some alarms on it for now. Today's kind of action. Here are the pivots on here, 57, 50, 64 kind of deal. What do we have for overhead? 50, 75. Basically, it's the whole thing. You know, if it goes higher, move your stop up if you're long. If it goes higher, move your stop up if you're long. And then the flip side is if it kind of comes back down. I guess we can use the old round 5,000, but you know, do like 50-30 on here. Do I have one? No, I don't. The old alert thing. There's nothing like somebody else doing the work for you, right? All right. Pating, sugar, okay, off a weekly chart here. Where are we at? We're in weekly chart here. So we have basically a 5-wave up. What I was mentioning was possibly like, say, a C wave down here, 17, and you know, you could be as deep as say 50% on here. Yeah, I'd be 17 or so on the move, but I mumbled 15. You know, it's all about the risk management here if you want to stay on board. Sugar, you know, really hasn't had a party to, you know, 50 cents or whatever. Uh, it isn't a bull phase, but just be careful of having to swallow a couple more pennies to hang on to this thing. Like I said, talking about a massive unwinding across the board, oil comes off, natty gas comes off, soybeans comes off, all of a sudden sugar comes off. If they have to hit the sell all button and we all have to unwind our positions, that would be your lottery ticket. If some of those want to sit and wait, if, give it some time, or, whatever we were waiting for in the marketplace, it's arrived. Silver, like I said, it's in the happy place here. Money flow still has room to run up here, per se. I'd prefer just to wait to buy silver when it's at $5 again. Physical stuff, 10 ounces a week, whatever, even a waiter can afford that with their lunch tips. At then it's $10 an ounce. Oh, yeah, that's what I did. I took my lunch tips and bought 10-ounce bars every day. I worked 11 of 14 shifts at the Rodeo Drive of Minnesota. What am I going to spend my money on with the 2 hours before dinner? Let's go to Southdale, the first enclosed mall. All right, so the silver action here, this is the happy place. So obviously if it goes above the happy place here, you're going to have all the unhappy shorts now, because this is the happy area, like the bell curve. And a good gun up in here. So, I'll pass. Like I said, I'll be more than likely to buy silver for, a couple decades at $5. That's kind of how I look at silver. TF, all right, here's our cracker, like safe cracker. This is these are obvious lines here, but this is, da da la la la, grunt. That's where I was looking for the swiping of the stops. They swiped, the floor guys that swiped, multiple weeks of stops below here. Usually there's this swing up above here, and it grunted and didn't get it, and we're cracking the bottom. So our Russell, which would be the leaders on this blow-off phase here of the market, the small cap stuff, similar to 97, 98, 99, that kind of thing. Stuff that people can afford, and just get them all frothy and riled up again. But every top is a little bit different. So in my case, after 8 years, like I said, the market you guys can all have the last 10%. I'll pass. But this one's beginning to crack, so watch your Russell. Looks like it's possibly making a bear flag off of here. If we give it another couple of days and see if it stalls about halfway back. 1360, what's up in here? 1368, 1370, we'll say. Then underneath here, like I said, I don't think any of these post-election pauses on the way back are going to hold. I think we're going to go back to the lows of 2016 just to start it off. I'm looking for something a lot deeper here. That's usually how the book is played. You get the recession out of the way to get reelected. But that would make Donald like almost 80. And his hair would probably be falling out versus gray. It's all right. Moving on. All right, ultra bonds here. Okay, I'm looking for C wave and debt kind of up in this area with just due to the fact that the money came out of it, just like the Eurodollar. So I'm looking for a C wave somewhere up in here. I can go as far as we'll say 69 to 71 on these ultra bonds. Here's the underlying resistance, 68. Just one more swing higher, than I'd be a big fan of adding fresh shorts to. We're trying to jam the economy in a recession, so we're raising rates. So I'd give it just, we can get some equity rollover and that kind of thing to go on. Look as a C wave, look to just short some of the stuff. Okay, I'm going to lean here on the VIX futures that we're making a bull flag of some sort. Here's the deal, right? VIX futures as low as, what, 8 or something, or thereabouts, you know. So we're back to this game again on the futures, you know, buy it, you know, under 15, 14, 13, 12, 11, blah, blah, blah. Deep pockets, sell it at 16, 17, 18. All right, last time we played that game, I was looking for like 22 to 24. I'm going to lean a little bit higher here and say 26. Okay, so if these things take off, you know, and you snagged in there, hold on to these suckers until over 20, all right? And when we get there, we get there. Usually it's not an all one day. But I'm treating VIX futures as a bull flag here, you know, a couple of days. This is kind of interesting though. I'm trying to figure out how this all plays out with the money flow, with how the chart behaves, but I'll take, I don't know, 252 math over the summer. So there's only two variables here. Yes, no, yes, no, yes. Okay, you know. So, but it's like confounding. The other deal too is you can get arbitrage in here. You buy the futures and then you sell off, say like VXX kind of deal. You sell off the VIX products, kind of like natty gas and gas kind of thing, and your oils and that kind of deal. Okay, so here we are with the Dow. We just saw the Nikkei, same type of deal. I'm going to lean that way. At best for the bulls, this is very shallow pullback, which means it's pretty well extremely bullish out compared to a deeper pullback. Very bullish. There's a C wave, anything above on the new high, you know, whatever, 20K, whack. Anything under this, it'll look like the Nikkei and it'll probably roll over. Like I said, I don't think any of these lows are going to hold. I think we're going to end up going back to January and February lows. So we're talking taking, 10, 15% off the top. I think my first stopping point was remember I'm using Richard Nixon's 1968 forward type thing. And his first drop was 12%. You know, ultimately, I would like to see the minus 38% kind of thing. Like I pointed out in yesterday's email on the Russell, 1998, that also set a low in an oil under $10, and with the Russian default. All right, so the Dow, a shallow pullback usually means it's very whatever direction it is. In this case, bullish. The Dow, I hate it. I do like it because it's $5 and price weighted, but I hate why is Polaroid? Why, you know, National Rubber? You know, just start naming the banana. Nike, run that one by me, okay? But it's bullish and easy manipulated. There's only 30 of them in there, blah, 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 yada, yada, yada. It comes down here, just whack it. It's worth hundreds. Yeah, I would rather skip the, 100 points forward, but rather go after the 1,000 points below, that kind of thing. You know, we're long in the tooth this overall in general. Bonds, right? Money flows out of this thing. They're basically giving up some sort of C wave. What did I say? Did I say 57 to 59 or whatever? Just one more swing higher. You know, this is the A wave, B wave, C waves, just whatever up in here, 57, 58, 59, 60, whatever. We'll see how if it does swing, then it should be pretty good for gold, bad for the dollar, and bad for equities. Okay, but good for housing. We have to take out the quarter point that Donald just took away from first-time home buyers. So the banks will make the extra money now, but the marketplace will suffer if everything reverts back to the mean, right? You take away the $40 a month incentive to buy a home. What a moron. All right, so then you give it to the banks, and then or is it imbecile? I'll take English over the summer too. This would be English 101. Ain't that a shame? All right. So the bond deal, I'm just looking for a C wave up in here. You all know that, except for the new subscribers and the new folk. But that's what I'm looking for. I've been looking for a while. Corn here, the bodies are in it. I'm leaning that last year was a wet year. I'm hoping that 17 is similar to 87, that we get bumper crops and stuff, blah, blah, blah. under $3 corn kind of thing. But if you look on the longer term charts and stuff, it does show the whole structure type deal. I think they're playing off this one. I don't think anybody's looking for this kind of stuff. Like if this doesn't happen, we swing below it. Then I want to start putting the stuff on pretty heavy because I'm looking for a drought, right? Just like a hard freeze. But I think the kids' little charts don't go far enough back. I don't know if mine these two. Well, you saw yesterday's stuff, so. Yeah, see, they're coming off of here. Where are we at 8 and 9? We need to go back to, post 96 forward. I mean, this does look good and everything, but here's a happy place. This is it for corn, 3 set for the data that's on the screen. Oh, this is hubris, so I think that's what they're playing off of here. What do we have? Oh, that's kind of pretty. I have a few of them already. 7 seconds away. Oh, I better wrap this up here. All right. So on the corn, not as I want to go and just bang the crap out of beans. 5's the same thing, just like with the rest of the year. We're looking for, this is A wave, this is B wave. We're looking for a C wave somewhere up in this area to add fresh shorts because we're actually aiming for double-digit interest rates over the next 2 housing cycles. Right? If I get my normal, we'll get 6% notes and that kind of thing. Add on $1.75 for margin for the banks, and we're talking shy under 8% mortgages again. Oh boy, make mansions for everybody. Yeah, right. Okay, so bean oil. This is usually a pretty good pattern here on the short side. Just the money flow is not in there, so it's just a cause of a worry for me. The pattern is short kind of thing, so I'm not sure if there's a seasonal bean oil on here. Like I said, I like the short side of beans, and bean oil come for the ride. Meal. Okay, so turned long on meal because there wasn't anybody in the money flow. We had a run up, looks like a bull flag. I'm leaning that's just corrective against this down pattern. I still believe that we'll see how this year pans out, of course, but my greed says I want to get long down here. So we shall see. It's an oddball time of the year to be getting started early here, so I called my mother in Minnesota. Yeah, that's for sure. And she says it's been rainy and everything. And you usually have -40 in January, not rainy. So that's a continuation of the precipitation here. But it would be quote unquote warm. And I believe that's what a drought is. The warm is still there, and then the moisture's turned off. So I'm playing mumbly peg with bull market and beans and stuff, but I would like to see the stuff all come down here product wise. Wheat may be on its own kind of thing. Separate wheat out from corn and beans, but each its own for markets. No, it's the same thing up to here, 125 plus. We're at 124.5. So I'm treating this as an A wave, B wave, C wave. Money flow. Nobody wants these things, and it stopped about half back. So if I'm standing on the floor, I just gun these things way up here. Take that, speculators. You can see the beans of flows in here. I still say that this is just a corrective wave against beans coming down. I was looking for 850. Now then I dropped it to 650 once I looked a little deeper. If this is true, there's serious pain headed the way to the lungs of beans. So in my eyes, I'd rather play beans. I'd rather see $6. It's kind of like we'll see. We'll be closer to 6 than 13 by the end of the year is what I'm guessing. But if it happens, whatever. That's how that goes. You're looking for it, and it didn't give you what you were looking for. I'm just going off of a lot of bodies here, just like on natty gas. All right. moving it along. 2 years, same thing. That's moved up pretty high. Eurodollars are definitely going to be in trouble. Twos, fives, and euros and that kind of thing. That's the front end. That's what you want to whack. This is actually going to make the C wave through there. So I'd be looking to kind of short the front end there. On the next swing higher, known about that for a couple of weeks or whatever. All right, wheat, the bodies are in here. The 25-ish area held, the breakout on here. Let it go. Remember, wheat is a little bit different creature than, seasonally. You have spring wheat, winter wheat, seasonal of Kansas City, which I found on my, it's KE way at the end of the list. They snuck it in there, the buggers. Found Kansas City wheat at Toss, so it's Kansas City over Chicago, and it's running. So just, stay along wheat. Commitment to traders is messed up for the big specs and stuff. So we have the markets on the wrong side of the trade here. The money's in here though. But on the flip side, you're coming off of, I was looking to try and score, start developing a larger accumulation plan underneath $4, and just kind of rode against it. So if by chance this doesn't hold and we roll through, then I'd start accumulation plan. That's one of those where it's a deep pocket type of thing, because you're going to establish you're going to be spread out over multiple contracts. Spreading, option selling, this is big time. That's how I look at it. How would I navigate, maneuver a bull run in wheat? By shorting beans first. Gotta get some more flow. All right, so wheat, right? Yeah, wheat. Okay, so just stay along wheat. It's it's just one of those things. That's what the chart says. But prefer to start buying, a lot under $4. Aussie dollar, happy places up here. Another half a cent or more. Yeah, 76. I'll pass on this one here. The whole trade with China, yada yada yada, la la la. Just money flows up here above where it's been previously. What's this? Weekly Aussie dollar. So what do we have, Cav? ABC, and then ABC again higher. 78. Well, that's another couple of pennies, 2.5 pennies. I'll just personally stand aside. Kind of similar to if I'm going after currencies, we already have the run on the euro, which is basically the cherry on the sundae, and the British pound is pretty well screaming, and the peso, and then outside of your, kroner, your Nordic ones too. Like I said a few times last year, unwinding of the European or the emerging growth, whatever, the dollar's coming off, all those runners. Now you have things like the carry trade of going to get, you have just straight up U.S. Turkey short and U.S. Mexican short, the gobbling up a trend change and interest rates. So those are the trades I look at. So I can say, no, I'm not interested in Aussie dollar. British pound, heavy volume news related, last week. I think it was Wednesday. Blah, blah, blah. Broke out. We're off and running. We're back to aiming for targets of into the 30s again. We'll call this the old W bottom. Like I pointed out in yesterday's video, I think you all had a link to it. Pound doubled in 5 years. I don't know if that's going to happen, but all I know is it hit a 31-plus year low, and that caught my attention. So I'll take long the pound, and I think the euro was who's looking for 109, 111, 113, that kind of thing. A little bit further than what people are looking for. You're sitting at 104 looking for par, and all of a sudden it's 111. Oopsie. Canadian dollar, in theory, you play the short side of this if oil's headed down to the 45 area. 48, I guess, for Brent. So same type of deal, sideways. sideways to down for right now. For the Canadian dollar, I'll say sideways to down for the Aussie. Euro, poked its little head through. Money still has run to room. Wow, 112, huh? I wasn't going to go that far, but I'll take one more swing in here into the euro type of deal. That would probably take the dollar under 90, or under 100, definitely in the 99. So that's how I'm leaning, that the euro continues on the breakout. I've been looking for this pullback in the dollar and gold and thing like that. Japanese yen, this would continue, and then also unwinding the carry trade on here. I was looking for, what was it, 113, 111 after 1880. We only got to 1860, whatever. Not bad from 104, huh? And then also shorting from 122 down to 104. Bad, Kevin. Should have started this thing sooner. Whatever. No one listens. All right. So, well, it's true, right? If I come out and say, look, they're all looking over the bank, they're all in the banking trade. Just whack them. The technical term. I suppose CMT is something I should strive for, right? Give myself a title. All right, whatever. So here we have Mexican peso, La Cucaracha. So we have a turn here and everything. Just hang on. So, if you're short U.S. Mexican, hang on. That's the kind of deal here. It's not because of anything economic, political, blah, blah, blah. It's because it's been trading down. Why did you get long? Well, it's been going down forever. Well, once in motion, stays in motion, whatever. How much more are we going to elect somebody who's going to make Mexico even worse? The only way we can harm Mexico is if we relax in different ways. Yeah, cabbie, bad cabbie. I'll tell you some stories. I'm living in Arizona now, so it's one of those, they like to publish stuff, and you're, what did they do? How did they? What? Just your maze. Arizona, the Mississippi of the Southwest. Okay, so this is it. The only reason the Mexican peso coming down, blah, blah, blah. Then the Trumpster's coming in. He's just going to, what's he going to do? I mean, it's already been done. So, get along where's the most pain in the Mexican peso? Up. There you go. Start whacking them. Probably Mexican peso and the British pound, probably maybe the short side of beans. What else do we have? Probably be some of the better trades for commodities this year. It's not as easy as last year. Last year was pretty much across the board. It was pretty easy read here. These are a little more difficult, but I think they probably have much better payoff. $400 in gold is a pretty nice payoff. But $4 in beans. What is that? $4,000 versus 20 grand. Yeah, I would have to say that shorting beans for $4 is probably a better deal than $4 in gold or $400 in gold, right? So I have my numbers right. Come on, Kev. Dude. No, 40 grand. Holy buckets. There we go. So, okay, whatever. Close enough. Well, yeah, right. So half is whatever. It all works out the same way. Where are you finding your return? What's this? All right, same thing. This is the 6N, which is your little kiwi here. Maybe a poke up and through here, but eventually this thing the dollar will eventually just whack the hell out of this stuff here. Run into a recession, commodities tank. After, a Mother Nature bull run. Commodities bottom. Mother Nature comes in the following year. Stuff goes flying. They jack up rates, jams the economy. Things begin to soften. Recession, election, Then we work on the real estate peak. That, then there's only, 4 years left of the 18-year cycle in real estate. That's right. It's almost over again. No, it's not going to be as frothy as last time because we don't have as many baby boomers. Okay, here's Brent. All right, so here's back at this. Like I said, that was short covered. The money's beginning to come out. They're beginning to realize they're on the wrong side of this thing. Happy place. 49 from 54 on oil for right now to come back down. It's the whole commitment. The deal though is what I'm having an issue with is everyone's beginning to scream commitment of traders report. And it's like, oh, you guys aren't that smart. Or modern technology is actually educating the herd to what the commitment of traders report is. The poker hands of the players every week or thereabouts. Crude oil here, same thing here. I'm looking for what 45 and 38, then and then we're work our way back down to lower 30s, and then I can start jumping up and down about $17 oil and not look like a fool, right? But I'm defensive on oil here. Ooh, the ES, same type of deal here, right? Same type of pattern, very narrow, shallow pullback, bullish type of sideways pattern. Like I said, I'm only looking for the market to double from here over the next 7 years. Okay, so wherever you want to find your double, yeah, I know if you just continue to buy ES and write options out of the money, blah, blah, blah. But, I'm for risk management, I'm done. Yeah, I'm done on here. I'll go find something else that, yeah, it's just a little too long and kind of on the industrial side. You're still going to get them all whipped up in. They're trying to do the Snapchat or WhatsApp or whatever IPO, blah. Just test the waters. And then our little fad here is probably our Bitcoin. There's always some sort of fad that goes on, like Beanie Babies. Our fad here is probably going to be the Bitcoin. Whatever, how it lasts. We make up credit card debt with nothing. Bitcoin is nothing kind of thing. It's exchanged for fiat or goods and services, whatever they believe. That's fine. Hey, look, you could use tulip bulbs to buy homes. Just, whatever. All right. So on the S&P, what do we have for intraday here? Blah, 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 blah. We're back down to like 2250 something, 49. Everyone's going to be pointing down here. I'll set your alarm a little bit lower. How about 2248? I'll do 7. I like 7 there. That'll work for Kevy. And then on the upside, and then our Fibonacci's, everybody has those, and your pivots and things of that nature, 65, 63. It hasn't changed. So upside is 2275.80 again up there, and then if we do get something to the upside on here, then you go back to your daily and weekly pivots off your charts here. So basically intraday sideways stuff. Go find something. Well, that's right. After it's been going sideways forever and just tightening and tightening and tightening, you tell them to go watch something else. That's exactly what happens to people. It bores them and it takes off and they're unprepared. All right. We're back to gold. Wow. Went through the whole circuit. Really? Went through wheat and everything. Wow. Okay. Rock and roll. I'll let you guys go. I'll type this up and send it on its way. Everybody have a wonderful day. And there you go. Toodles.